Welcome to the Rob Seco Field Ready Podcast with your host, Jim Robinson.
Hello and welcome back to the Rob Seco Field Ready Podcast. I'm your host, Jim Robinson. And in today's episode, we're going to talk about the seed industry. I mean, every industry undergoes some change with the expansion and contraction of different players. The seed industry has undergone consolidation since the mid-1990s. But what we want to talk about today is what happened and why did that occur? What does it mean for farmers? And what can we learn from the seed industry when we look at the beer industry? Today in our episode, we have Professor Phil Howard from Michigan State University. Hello, Phil. Can you introduce yourself?
Yeah, I'm a faculty member in the Department of Community Sustainability at Michigan State University, and my research and teaching focus on the food system.
Excellent. So you've done a lot of research and a lot of writing about the consolidation of different industries. In particular, one of the industries you focused on has been the seed industry. Can you tell us a little bit about kind of how the seed industry has contracted over time? You know, what was the landscape prior to the contraction occurring?
Yeah, even as late as the 1970s, there were thousands of independent seed companies in the United States. And many of those started to be acquired by various larger firms. And then this consolidation really accelerated in the mid-1990s when chemical companies started to patent transgenic seeds. They were commercializing seeds that had full patent protections. And that really changed it so that the smaller seed companies were losing market share to these firms. In many cases, they had no choice but to form alliances with these firms at the beginning or to be acquired by these firms. So it actually was a really global change to where just six firms very quickly gained the majority of control of the world's proprietary seeds.
Absolutely. And now that's a really interesting statement you're making that you know people think of today individual companies having proprietary genetics that they've worked on and developed, but you know that wasn't always necessarily the case. I mean, prior to the 1970s, there wasn't any sort of a plant variety protection landscape for patents or any other agency, and so with that, I mean, as you've seen kind of additional investment come in, particularly from chemical companies, as you mentioned, I mean, how has that and the enforcement of those laws, how did that really roll into the acquisition of the smaller companies?
Yeah, it was really critical. The intellectual property protections have been changing over the years and getting stricter and stricter. And essentially, you can think of them as taking away more and more rights for farmers to save and replant their own seed. And the enforcement of that by the federal government in the U.S. and other governments, other places, have made it really challenging for farmers. We've had examples where farmers have gone to prison for saving and replanting seeds. So this has, steered a system where farmers could buy seeds and then maybe save and replant them year after year to a situation where they can no longer legally do that. So farmers have to go back to these seed companies year after year, and often the biggest seed companies in the world who have most of the patents, and then they don't have the option to exchange seeds with their neighbors or save their own seeds.
Exactly. I mean, bin running seed was a very commonly used practice. I mean, even through parts of the 90s with soybeans, bin running seed was fairly common practice. And with corn, it was just a little bit different because with corn, you couldn't use open pollinated varieties anymore, basically after the advent of hybrid corn in the late 30s, as open pollinated varieties have traditionally not been as competitive as hybrid corn. Now, you mentioned this earlier that things really started to accelerate in the 90s, and you know the patent protections initially came in on germplasm around the early 70s or so, but transgenic seed in the 90s really accelerated this factor. And if you could just touch a little bit on how and why maybe it caused that acceleration.
Yeah, it was 1996 that Roundup Ready soybeans were introduced by Monsanto, and the adoption rate was sky high. So very quickly, over 90% of soybean farmers started using these seeds, and that made it so that culture of saving and replanting seed, bin run seed, was very quickly dismantled. You had a lot of seed cleaners. Almost every county used to have a seed cleaner. Mm-hmm. They went out of business. And not only that, Monsanto was able to tie an herbicide that was about to go off patent to these seeds. So they were able to leverage a monopoly in one industry to a monopoly in another industry. And it was very effective for them. They had really high profits. They made a lot of money off of this. Remarkably, they maintain a really high share of glyphosate sales, 80%, even 6 years after the patent ran out. And that was despite the fact that prices were 3 to 4 times higher than generics. And it was because they had become so powerful and had so much influence on seed dealers with incentives and were able to tie this proprietary herbicide to their proprietary seeds.
Absolutely. So almost a dual monopoly on not just the germplasm itself that they're developing and introgressing these traits into, but also the herbicides, which provided a dual mode of profitability for companies like Monsanto. Now, you mentioned that there was a really rapid adoption process of glyphosate-resistant soybeans, and we've seen the same thing across all crops that have had broadly commercialized transgenic traits, so corn, soybeans, et cetera. And so when there's only one provider of this technology, I mean, how has that really allowed those giants like Monsanto to not only gain the monopoly, but also impact price?
Yeah, I mean, there are very few firms that can do the research and development and the regulatory costs for bringing these traits to market. And so when you have a blockbuster trait that farmers want, like glyphosate resistance or expressing a Bt toxin, Monsanto was the only game in town, although they also developed a web of cross-licensing agreements with other major firms. So, when other companies develop their own herbicide tolerance or other traits, they would exchange those traits so that each firm could kind of stack them up in one seed, which created a huge barrier to smaller independent firms. To get access to those traits, they either had to form an alliance with them or be acquired by them. And often, not on the same favorable terms that the more powerful players had to get access to those traits. So it was essentially a cartel that kept out smaller independent seed companies and made the industry far less competitive than it should have been.
Absolutely. And with that, the term cartel, you can picture it in such a way that when over 90% of the industry is controlled by a particular trait, for a while it was the Roundup trait, any individuals with germplasm that didn't necessarily have licensing agreements to introgress that trait into or whatnot, it knocked out other players in the licensing market. So what we've seen in the industry is an expansion in what overall royalties may look like for either germplasm or trait royalties. Back in the early 80s, prior to transgenic traits, you'd often find from several different licensing sources that you could license and pay royalties on, say, a corn hybrid for approximately $5 per unit. And today, that price is actually more can be at the highest end over tenfold the price of what a hybrid royalty cost in the early 80s. And that's outpaced the rate of inflation by approximately 3 times. So it's been an interesting landscape. Now, there have been additional investments into breeding during that period, but as we look at the barriers to entry for breeders to get into it, it's really helped to push an exit in those independent breeders in the marketplace. So, Phil, what does this mean? What does the consolidation of the seed industry mean for farmers? I mean, how does that impact them in the way they do business as well as what their outcomes may be?
Yeah, we've touched on higher prices. For example, the higher prices for glyphosate, the seed prices have gone up. And that's not surprising. Economists say that when roughly 4 firms have about 40% of the market, you can expect prices to increase because they can just signal their intention to raise prices and the others will follow suit. And, we have a situation now where just 2 firms control about 40% of the market globally. But it's not just prices. Farmers have experienced fewer options. There are less varieties some of these firms have dropped a number of varieties as a cost-saving measure to pay back the money they borrowed to make some of these acquisitions. Another change is, people could debate, is there less innovation? I tend to think there's a lot of evidence that there is less innovation than there used to be. But what's clear is the innovation is becoming more narrowly targeted, focused on, for example, blockbuster traits in just a few crops and targeted just a few geographic areas where these firms can get the best prices for those traits and crops. So, and then we also touched on the decline in seed saving. So the infrastructure for saving soybeans has been dismantled. Some of the newer farmers in the last few decades don't have the experience of saving and replanting seeds. So that's another big change that the industry is seeing. Absolutely.
And by blocking, a lot of independent seed companies got started due to that saving seed, and it was just basically a farmer who saved back some seed, and maybe sold some of it to their neighbors, and then kind of expanded from there and grew into what now has become a successful seed company. But without that, we kind of increased the barrier to entry, because to get into today's seed selling environment, you really need to have a large amount of assets with agreements with multinationals and the know-how to be able to market the seed and appropriately steward the various traits in those seed. Now, this is a fairly bleak outlook on the seed industry overall. I mean, it doesn't look great for farmers, but is there any silver lining there if we look at other industries and say the beer industry?
Yeah, I think the beer industry is a really positive example of what can happen. We had a few firms become very dominant a few decades ago. So by 1979, for example, there were less than 100 breweries in the entire United States. And there wasn't a lot of diversity. They were all putting out basically the same product, a pale lager. Most people can't tell apart in a blind taste test. But then there were some regulatory changes. Home brewing was actually illegal until 1979. So when home brewing was legalized, from 1920 to 1979, nobody could brew beer at home, because after Prohibition, it wasn't lifted. But then we had all these craft breweries start in the 80s and 90s, and they slowly picked up steam. And as the big firms got bigger and less innovative and increased their prices, that made it even easier for some of these smaller firms to succeed. And we now have a situation where in the US, about 25% of sales are from independent beer firms, and the bigger firms are really struggling to maintain the share that they have right now.
Now, how were those independent firms able to differentiate themselves from basically the oligopoly that existed at the time? I mean, they weren't just making American-style pale lagers. What were they doing to differentiate?
Yeah, we had this explosion of craft breweries that focused on all the varieties that people couldn't get in the United States, except for a few exceptions with imports. So, the Great American Beer Festival for years has increased the number of categories they judge, and then the subcategories within those. So you have about 100 different beer styles that are judged at this competition every year. And there's an enormous amount of variety available to people at their mainstream supermarkets, which didn't exist a few decades ago.
Absolutely. So they were able to differentiate by offering a product that was fundamentally different than what those large firms were doing. And just to kind of tie this back, because we've seen that shift to now become, like you said, about 25% of the market in the beer industry, and the only limitation right now is on predominantly the distribution side of things, I believe. Is that correct?
Yeah, it's been a real struggle. Even though it's now easier to get into brewing beer, the distribution, getting onto retail shelves, is still dominated by these largest firms. So unless you're Anheuser-Busch InBev or Molson Coors, it's very hard to find a distributor and to break into those shelves. And even the largest craft breweries are struggling, because Anheuser-Busch InBev is, in the states where it's allowed, starting to take over distributors that used to be,, their distributors, but they were legally independent firms. Mm-hmm. Now they have 3 or 4 distributors, and they're just, getting into those shelves. And even the largest craft breweries are struggling, because Anheuser-Busch InBev is, in the states where it's allowed, starting to take over distributors that used to be, their distributors, but they were legally independent firms. direct distribution in 11 companies that they've acquired. Roughly 10% of what they sell, they now sell directly to retailers. And a lot of people don't know that these firms, AB InBev and Molson Coors, have a lot of power over the layout of the supermarket shelves. They determine which beer goes where, how much space it takes, and that's why you see massive amounts of shelf space taken up by AB InBev, Molson Coors products, even if they may have different brand names that you don't realize are owned by them. And they're trying to narrow the space available to those craft beer, even as their sales are increasing. So they have no problem, helping these retailers make less money by selling more of their products when they would make more money if they expanded their this shelf space devoted to craft breweries.
Exactly. So the craft brewers absolutely do have their uphill battle to fight yet, but they have been able to more or less kind of, to a large degree, change the taste profile of American consumers that realize they no longer just want that American style pale lager. Now, how might that relate to the seed industry? What can the seed industry do in order to more accurately, or not less more accurately, but better emulate the beer industry and maybe improve upon it in terms of diversifying suppliers?
Yeah, one of the things about getting bigger and bigger is it makes you less nimble. There are a lot of spaces that you can't get into. You can't move quickly enough. So, one response, the big brewers have now started to buy up craft brewers because they didn't have the ability to innovate and create new styles and focus on that aspect. So, but there are other, it shows that there are spaces where people can address things that the big brewers aren't doing. And, when you become a near monopoly, you get kind of complacent and you tend to not work very hard to please your customers. So the big brewers have, they've cheapened ingredients, for example. A lot of big firms, they don't provide, the same customer service in the seed industry, for example, that a smaller firm can provide. So it opens up a lot of opportunities. Things like, seeds that are targeted to specific regions. The big firms are having less and less ability to do that, to develop traits that are not just blockbuster traits, the traits that maybe smaller groups of farmers would benefit from. These are all ways that, smaller seed companies can find a space within this industry that at one end is becoming more and more dominated by fewer and larger firms.
Yeah, so I think overall, kind of what we've talked about in general is that the seed industry that was once thriving with thousands of individual small companies, it contracted extremely rapidly from the 70s and especially during the 90s and early 2000s. And a lot of this, what ultimately created it was intellectual property protection around the germplasm and more particularly around the transgenic traits available. And so because of the rapid adoption of those traits and the mechanism via which they created more or less a monopoly on the seed and germplasm in the industry, as well as the herbicide used, created such profitability that a lot of the smaller firms were acquired. Now, if we look at the independent craft brewery market, what we can see is that by changing their overall product offering and what kind of specialties they get into, the seed industry may actually be able to learn a couple of things and focus in with smaller and more independent companies on those specialty markets, whether it's taking what a major company would consider as a leveraged market and actually focusing on developing products for that market, or differentiating themselves through services, characteristics, as well as any other differentiating factors a small independent may be able to do. Well, Phil, thank you so much for joining us on today's episode.
Yeah, thanks for having me.
As always, be sure to tune in on the 1st and 15th every month for new episodes. And until then, stay field ready.
Thanks for tuning in to this episode of the Rob Seco Field Ready Podcast. Join us next time to be field ready.
A Parkville Media Production.